International cooperation has done a few things. One of those is just bring more attention to the issue. If you have new countries that weren't previously prosecuting, suddenly prosecuting, then that's making the local newspapers and bringing attention to the issue in a way that attention wasn't being paid before. So just raising public awareness. It's also frankly raising fear, the level of fear. When a German company is watching American companies prosecuted with impunity, over and over again back in the United States, that may be interesting to them, but it's not all that relevant to them. When a German company is prosecuted in Germany and the numbers are staggering, then suddenly you have the German community's attention. In addition to that, of course, multinational companies are operating in sometimes more than 100 different countries and suddenly see the risk not only of being called out in the United States, but in some of these other markets. And that really increases their risk exponentially. In a large number of countries, the total penalties can mount very quickly. As we saw in the Siemens case, there was an American penalty and a German penalty, and of course together they came to more than $1 billion. I think there are countries like Nigeria that have very few resources dedicated to prosecuting bribery. If another country does the work for them under their own laws and brings that company to justice, and that results in some sort of conclusive court finding or settlement document, prosecutors in less well-resourced countries can use that and bring that company into court in their own country. Yeah, the ideal corporate compliance program is not actually that complicated, right? You have to have a good written, clear policy. You have to roll it out comprehensively. You have to make sure people understand it or have someone they can ask if they have questions. And then you need to have sanctions for people who don't take the policy seriously. The problem with that ideal program can either be lack of resources. You get the policy written and you roll it out, and then that's where the commitment ends, or what I call the silo effect, which is you keep all of the compliance officers in some cases, one building, talking to each other, and they have a high level of expertise, but none of that filters out to the field where people need it most. Again, it comes back to resources. I think there's an expectation that the global financial meltdown was going to have a bigger impact than it did. I think what we're seeing is perhaps greater bifurcation. That is, companies that were taking this issue seriously already understand the risk and understand the value, frankly, the reputational value of having a good compliance program. They're going to continue on that track. They may have to tweak things a little bit. They may have to scale back proportionately with the other budgetary trimming they're going to have to be doing, but they're going to proceed along that track. The companies that weren't doing anything before aren't going to start now. This is not the right time for even a real advocate within the company to expect a great deal of success, saying this is a new area of compliance we want to focus on. But I don't think the companies that have seen the benefits of a good compliance program and seen the risk that's out there are going to scale back in a way that really damages their programs.